there will be a monetary demand that's really strong in both the metals. At the same time, the industrial demand, let's say, is steady or higher. So you're going to have two forces vying for the same product. You're going to have a monetary demand in silver that will accelerate, as you just outlined. It outperformed gold last quarter. What if it continues to outperform gold for the next 2 years? And that's a possibility. I'm not guaranteeing it. I'm suggesting you think about that. If that's the case, and you still have this huge push into solar, so I think the demand is really strong on both ends. I just want to make one more comment. I'll give it back to you.
The silver market is experiencing a remarkable surge, driven by an increasingly widening gap between supply and demand. Demand has outpaced supply for the fifth consecutive year, pushing prices to new heights. This trend is largely attributed to the metal's growing industrial applications, which now account for a staggering 64% of global silver demand, a significant 19% increase from the previous year. DavidMorgan, a veteran analyst often called the silver guru, has closely monitored these developments. With decades of experience in the precious metals market, Morgan believes that if silver continues to outperform gold in the coming years, coupled with the burgeoning industrial demand, we could witness unprecedented pressure on the silver market. The primary catalysts behind this supply squeeze are the rapid advancements in green energy, artificial intelligence, and electric vehicles, some of the fastest-growing industries worldwide. The green energy transition, particularly the expansion of solar energy, has significantly contributed to silver's industrial demand. Morgan points out that solar energy adoption is increasing even within the mining sector. Mining operations are increasingly turning to solar power due to its cost-effectiveness and ease of implementation compared to traditional power sources. This trend not only underscores the growing importance of silver in renewable energy, but also highlights the metal's crucial role in its production cycle. Historically, silver demand was evenly split between industrial use and investment. However, the recent shift towards greater industrial demand signals a fundamental change in the market dynamics. This change could set the stage for significant price movements in the silver market as industrial consumers and investors compete for a limited supply. Please tune in for our exploration of DavidMorgan's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
Anyone that's long is excited. I mean, silver's not at an all-time high, but it's at an 11-year high or close to it. So I think silver's catching up with gold. I mean, I don't know what interview it was, but one or two ago, we talked about, where are we in the metals market? And they said gold's, broken out, and we'll see silver catch up at some point. As far as I'm concerned, it's got a lot more catching up to do, but certainly it has with the numbers you just gave. And I think it's got, people that are involved in silver somewhat excited, but obviously overlooked by the mainstream. I mean, very seldom hear much about silver other than a display of the price on the mainstream financial channels. Once gold is more mainstream, as we both know. The banks still own it. Central banks have been big buyers. It's really more of an establishment, conventional investment, but not relative to silver. Silver is sort of out there at the outskirts and very seldom. But once the bull market really gets going, then, they will have people on talking about silver market. I mean, remember in the main bull market when we first met, we had that 11-year bull market in gold and silver. Silver outperformed in some years, underperformed in others. But, I was on national television, I don't know, about 4 or 5 times. And, that hasn't been the case. And it's not
Right.
about me, but I'm just saying that silver
No,
was
but
in the
very
news
telling. Yeah.
and now it's not. You just don't, ever
Huh.
hear about it really. I was thinking about that this morning before the show. Right now, probably around 60% of the market is industrial. So obviously that's the lion's share. 60% of 100 is, 6/10. So, but the problem for the shorts is this. As we get through this quagmire of currency wars, which we're seeing with the Japanese yen and what it could do to
Yes.
interest rates and all that's taking place in the let's say mainstream financial markets where most people pretend to believe that those units of currency actually have value. As that unravels further and further, and maybe the Japanese have to start selling off the USD and their bond holdings, and you start to drive interest rates up, not down, you're going to see more and more pressure on the precious metals. And the point I'm making is simply this: there will be a monetary demand that's really strong in both the metals. At the same time, the industrial demand, let's say, is steady or higher. going to have a monetary demand in silver that will accelerate, as you just outlined. It outperformed gold last quarter. What if it continues to outperform gold for the next 2 years? And that's a possibility. I'm not guaranteeing it. I'm suggesting you think about that. If that's the case, and you still have this huge push into solar, because solar is actually about as cheap as other forms of electrical conductivity, and think about where you're going to put it up. You're out in a, you're putting it in a mine. I would say all, I was going to say all, but many of these new mines, they put up a solar array because it's easier, cheaper, and faster to get the mine in production by putting up a solar farm than it is to tie into the grid that's 16 kilometers away. So, when it costs the same and it's faster and there's less red tape, you're going to go to that. So I think the demand is really strong on both ends. I just want to make one more comment. I'll give it back to you. In 2020, the investment demand for silver was over 500 million ounces. That's better than 50% of the market. At the same time, you had strong industrial demand. That happened 1 year and 1 year only so far. But I think that's kind of a precursor to what could happen in the future.
In a striking display of its enduring appeal as a safe haven asset, gold prices surged past the $2,400 per ounce mark on Thursday, registering a more than 1% increase. This rally was fueled by unexpected U.S. economic data that has rekindled hopes for the Federal Reserve to cut interest rates. The precious metals ascent continued into Friday, with prices holding steadily above the $2,400 threshold despite a brief dip to $2,391. This performance sets gold on track for its third consecutive week of gains, a trend driven mainly by growing speculation that the Federal Reserve might initiate its easing cycle as soon as September. The recent Consumer Price Index data, which revealed a surprising slip in U.S. consumer prices last month, fueled this bullish sentiment. DavidMorgan offers an intriguing perspective on these market dynamics. Morgan predicts that as we approach the twilight of the current financial cycle, we may witness an unusual phenomenon, a simultaneous rise in U.S. dollar and gold prices. Let's get back to the interview.
First of all, you can you can manage the price in the futures markets for almost any commodity, because if the supply is more or less infinite in contracts, then that means it's cheap. So if you can produce a piece of paper that will purportedly be exchangeable for physical silver at some point in the future, then that is a huge supply. Really, it's an infinite supply. It's not supposed to be. There's supposed to be limits on the amount of contracts you can produce, but the CFTC kind of looks the other way. So that's been the case in silver more than any other commodity. Yes, there's weeks of hypothetical or paper, gold, and other commodities, but silver is the extreme case. So the problem is that as the market ebbs and flows, as long as the physical demand is met, and it has been in most cases, the amount of paper doesn't matter to the end user. It matters in price, but it doesn't matter in practicality because you're still getting your demand met. The problem is that that could come to an end, and it has a couple of times, just very, very uh, sparsely for just, a few deliveries or that type of thing where there's a delay in the market, or there'll be the contango moves backwards, you get into backwardation, and so then your spot market is higher than the futures price, so that kind of flushes out some silver into the market. So the problem is, and I've thought about this before our interview, is that even when your open interest is at a low, and the longs have been washed out and the shorts have won again, and they pocket the currency in their back pocket, you're still at a very high level of short positions that really can't be met. So there will be a day that there will be a non-delivery, an excuse. We have to be met by some means or some delay. I think once that happens, if it's known to the general public, then I think you'll see a rush in the silver market, because there'll be people that know that there is a demand or a short squeeze that's occurring. And I think that's more or less inevitable. I do, but I also want to go on record or reiterate what I've said years ago. I said, a big believer in the extra pyramid. And what you'll see by understanding that is that the dollar and gold will basically go up at the same time near the end, because in the liquidity pyramid, where you're striving to have something of safety, which there's one thing's less safe than gold, but perceived by the public that doesn't even know about the gold or silver market is that piece of paper. A run to the dollar, and since the dollar is the most coveted currency of all of them, then the dollar could be gaining in value versus other currencies, yet gold is gaining on the dollar. Why? Because it's superior to the dollar. That's why.
Mm.
So that doesn't surprise me. And I've been looking for this for a long time because to me, it's a clear indicator that we're getting near what, Rafi Farber calls the end game. We're at the end where we can't pretend that these pieces of paper from government entities that are borrowed into existence by, corporation or a central bank that's privately held that issues the currency to governments can't win. There's not mathematically a possibility of ever paying back this debt. And as more and more people not only realize it, because most bankers do, most finance people know it, the dollar's going up, the gold is going up, silver's confirming gold's move. There's a lot of angst in the market, and even a country like Japan saying, "Well, we got to save our own currency. We're going to have to off some of these bonds and get back to, some legitimacy or belief in this currency that we have, even though our deficit is so extreme that our GDP to debt ratio is off the wall. We'll pretend everything's okay. It's not okay. It's not going to be okay for much longer."
As gold prices continue to surge and economic uncertainties persist, investors and analysts are left pondering. Are we witnessing the early stages of a paradigm shift in the global financial system, where both gold and the US dollar simultaneously strengthen? And if so, what might this mean for the future of international monetary policy, investment strategies, and the long-term stability of traditional fiat currencies? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.